why do you care about smart contracts? What is their unique value? Their unique value is because they're extremely reliable. They guarantee contractual outcomes. How do they guarantee contractual outcomes? Well, you have many independent nodes validating computation about a state change of a contract, right? The problem is that only state changes you can really do now are about tokens. So you can say, I want to make a token, and I want to transfer tokens, and I want to change who owns tokens, right? But I've been in this industry for approaching 7 years now, building smart contracts.
Yeah.
And the reality is that that's interesting for the first year or two, and then you start to realize that the same trust dynamics and the same benefits that you could apply to ownership through tokenization can be applied to the entire world of digital agreements. And that is the entire global financial system, that's the global trade system, that's the insurance industry, and all the same trust benefits and efficiencies and transparency and fraud-proof capabilities that you get from tokenizing something, that can be applied to all these other contracts. But the hurdle is that while you connect a smart contract to everything that defines these other industries' contracts, you want to retain the security, right? So on the one hand, you want to expand what a smart contract can do, but in the process of expanding it, you're creating what's called attack surface area. So you're creating a failure mode that could break the contract and break that extreme reliability guarantee. So it's these two things are at odds, and this is the nature of the problem we're solving, is we're allowing people to both expand what a smart contract to do and at the same time maintain those security guarantees. Because those extreme reliability guarantees are the only thing that really defines a smart contract. Whether that's a well-named, good name for this technology or not is, it's like a semantics question, but generally speaking, when people think smart contract, they think extremely reliable. They don't care if there was a failure at the code level or at the data level or what level, right? The contract is supposed to guarantee them extreme reliability, and that's kind of what we're aiming for.
That's perfect.
Great.
So tell me a little bit about the impacts of this. Let's kind of throw this out a few years. So you've got these things that you're talking about now, these verticals with finance and these other contracts. What's the full breadth of the vision of where the Oracle network, what can it empower and what can people build with this that's even more, say possibly five and even further down the road?
Well, I think if you look at what can happen if all the valuable, highly trusted forms of digital agreement become smart contracts that are securely connected with all the inputs and all the proof that something occurred in the contract, right? That the thing insured actually broke, or that the market price changed, or that the goods were delivered, right? If you make a truly trustworthy, automated, transparent system of contracts, and you extend it, let's say even just the global financial industry, that deals in financial products, I think there's two very significant things that can happen. The first very significant thing is in developed markets. So developed markets have very large systemic financial risk issues. They have massive boom and bust cycles, which benefit a very small minority of people that know how to work those boom and bust cycles to their benefit. While those boom and bust cycles essentially create an unstable economic environment for the average person, right? People lose houses, people lose jobs, and that's because these people are just average people that are not involved in how the global financial system works. They are just users of it. Now, if you look at the last large crisis in 2008, if you really look at what the issue was that there was no transparency about what was going on, essentially with a contract. So people would go into banks, they would take out, loans and mortgages against properties. Their income wasn't clear, how many loans and mortgages they had wasn't clear. It wasn't clear to different people in the process. And then they got all packaged up and sold to people, where a very, very small minority of people that were able to look past multiple layers of opaqueness, only those people could understand what was going on and massively benefit from that inefficiency and that systemic kind of failure. Now, imagine if Joe goes into a bank and he can make a smart mortgage for a slightly better loan, right? For a slightly better rate. Now, that smart mortgage comes to encapsulate him in a single record that moves from the issuing entity into the commercial bank, then into the investment bank that securitizes it, and then over into, however that gets sold, and over eventually into the holders. Now, if people would have been able to look at a granular level at every single asset, in this case, Joe's, loan revenue from his, loan repayments, they would have been able to see all of this. And sure, something like that may have still happened, but with that level of transparency, it would have never reached this size. Now, I think in developed markets, upgrading global financial infrastructure means that those markets are efficient, they work properly, they don't have huge systemic financial risk in the many ways where basically a lack of understanding by market participants creates these huge issues. The second thing, which I think is actually going to affect even more people, is the capacity for certain emerging markets that don't have a sufficiently reliable legal system to see the appearance of new contracts. So what that means is, let's say I have a farm and I would love if somebody would give me crop insurance. Because in reality, the basis of many financial contracts was things like crop insurance or insuring boats to travel across large distances to discover things. And the basis of many financial instruments was not speculation. It was the capacity to hedge against risk when you have a real business. So there are many, many people all over the world that don't have an ability to combat inflation from their local currency. They don't have ability to save money reliably and securely because the local legal infrastructure doesn't allow people to hold banking institutions that actually provide the reliability banks should. They don't have the capacity to insure against life-changing events. And that means if one year or 2 years the rainfall isn't where they need to be, then they need to close down their farm and completely, upend their life. And these are all kinds of dynamics and things that people in markets with a working legal system that can provide these types of contracts take completely for granted until something like systemic financial failure shows them to be unreliable, right? And I think there's a very big opportunity to change the way the world works in emerging markets with this technology. I think it just needs to get polished and usable to a sufficient degree such that somebody on a feature phone or their $50 smartphone can now have a savings account without somebody needing to make a bank in their local jurisdiction. They can have insurance against catastrophic events related to their life and business without somebody having to make a local insurance company, right? So the insurance payments would happen based on an oracle determining whether there was rainfall, and it's a technically enforced contract. It's not a legally enforced contract, because I think there's pretty much billions of people that have been waiting for certain legally enforced contracts that have not come, and if this technology doesn't bring that to them, I'm not clear when it will come unless they solve all these governance problems about how the government should work.
Which they're not likely to do. If they haven't done it yet, it's unlikely.
Yeah. So a parallel technologically enforced legal system can completely change the developed economy's approach to systemic financial risk, which I think is going to be very significant, and people are going to pay a lot more attention to when there's going to be another downturn or correction or crisis or whatever you want to call it, and that's when this issue is going to become very important in those markets. And in emerging markets, I think the capacity to give people a mobile phone and access to the internet, and through that now give them access to all kinds of financial products and insurance and things that people absolutely take for granted, but underpin the stability of their life, and giving that to people that don't have it is really a world-changing thing, in my opinion.